It's great to have you join us at another edition of the only weekend business program live on Channels Television Capital Market. I'm Ladi Williams. Let's begin the show as usual with a review of performance of some of the major global stock markets for Friday. Major bourses around the globe ended the second trading day of the week of May mixed as traders digested fresh economic data and more corporate earnings within the week. In the United States, the Wall Street, we see it ended red. The Dow Jones Industrial Average ended down 0.03%. The S&P 500 is down 0.35%, and the Nasdaq down 0.35%. S&P 500 down 0.16%. For markets in Europe, they ended the day higher as investors assess the state of play across first quarter earnings and economic data. UK's FTSE 100 index gained 0.31%. Germany's DAX rose by 0.5%, while France's CAC index closed the day up about 0.45%. In the Asia-Pacific region, markets ended mixed on Friday after investors reacted to the latest U.S. inflation report, which shows more signs of easing. Japan's Nikkei 225 ended Friday up nearly 1%. Hong Kong's Hang Seng Index fell 0.59%, while the Shanghai Composite dipped by over 1%. For analysis now, let's bring in Olumide Adesina, financial market analyst. Hello, Olumide, great to have you.
Yeah, thanks for having me. Good evening, Ladi.
Good evening. So it's all about debt right now. How much is the debt ceiling negotiation impacting investor sentiment in the U.S.?
Definitely, it's been quite shaky, particularly in the Treasury bond market, and that's because the United States usually have what we call a debt ceiling limit, and that was put in place to allow fiscal discipline. Right, as we're talking, it's about $31.4 trillion, and what the United States government, when it's fast approaching that number, they seek congressional approval. But this is a Republican House, and they usually depend likely on spending cuts. They feel that the government is spending so much, and the politics is playing on. But I think it's not a big problem looking at the market in the short term. That's why the parabolics is very unlikely that the settlements will not be agreed on. But looking at the numbers, the United States brought in $4.9 trillion in 2022, and they spent $6.27 trillion, having a deficit of 1.38. So it tells you that the Republicans are not really happy at the way the Democrats-led administration is spending. But if you look at the last time the United States had a surplus, it was during the era of Bill Clinton. And I think with the narrative of high inflation and the cost of living really going off the roof, it's very unlikely for us to see spending cuts in the near future. But having said that, the market has reacted kind of positive on Friday, and that's why you saw a lot of equities, as you mentioned, because the US dollar was up by 69 basis points. It broke the euro. The euro is trading below the 1.1 resistance level. And also, if you look at the British pound, also it had some moderation. So the United States short-term debts are looking more attractive. We're seeing treasury bills giving a yield of 5%, and that somehow has even affected more countries like Nigeria, because a lot of investors are really going to safer bets. So while we are looking at it from the market reaction right now, I think sanity will prevail, just like James Diamond, the CEO of Morgan Chase, spoke a few days ago, that it's very unlikely that we see an eruption in the treasury bill market.
Right, and investors globally are looking for signs that inflation is easing, in the U.S. Is that the catalyst that will take risk assets to new highs?
I think it shows the US Fed is working based on the fact that at some point US inflation rate was going as high as 10%. Now we're seeing really going as much as below 5%. But if you look at the US Fed narrative, they are really looking at bringing it as low as 2%. Wow, that looks like they are not looking like any interest rate cuts. A lot of bookmakers are putting the fact that the US economy seems better immune than other markets to withstand higher interest rates, but that has really caused some deficit across the banking system. We saw regional banks, stocks and the market contagion leading to the closure of two important banks. So yes, while you could say that it really could put risky assets in long term, but we also need to also look at the fact that the US Fed has also been shrinking its balance sheet. Last month, it's removed over $95 billion, and that's really kept the market liquidity growing. And that's really affected a lot of risky assets, including the crypto market. But I think if you look at across stocks, the fact that Google had a record gain this week because of the fact that it introduced AI, artificial investors were feeling that they came in late, it came up. And also the fact that Boeing also had a deal with Ryanair, that also gave the stock some support. So there's still been strong support, there's still been strong fundamentals across certain stocks, but generally investors are looking at we might have that mild recession.
Right. The dreaded R word, recession, still weighing right here in 2023. Thank you so much, Olumide Additional, a financial market analyst. Enjoy your weekend.
Yeah, thank you very much.
All right, and back home, the local equities market, investor sentiment ended the second trading week of May downbeat. The benchmark index and the equities total value fell by 0.48%. This comes amid a mixture of bargain hunting and profit-taking activities recorded across the 5 key sectors within the 5 trading sessions, while Boss Cement's share price lost about that loss contributed largely to the loss we saw this week. However, the activity chart ended positive as the total volume, value, and number of deals carried out this week were significantly higher in contrast to the activities recorded on the NGX last week. Meanwhile, Computer Warehouse Group topped a list of 48 gainers with more than 56% increase on its share price. CNI Leasing led 29 other losers, down 19.6%, while the trio of Fidelity Bank, Access, and FBN Holdings were the top 3 contributors to more than 3.6 billion shares traded this week. And at the unlisted securities market, activities ended the second week of May in the red, as both the NASD OTC Exchange Security Index and market capitalization dropped by about 0.25%. However, it's a different picture for the activity chart of the market, as the total volume of securities traded on the exchange jumped by more than 84%. Total value of securities traded soared by more than 500%, while deals and stocks traded this week were also higher in contrast to last week's performance. And talking about the NASD, we got some rules from the SEC recently, and joining me now is Mr. Waride Longe, MD, NASD OTC Exchange, joining me via Zoom. Great to have you on the show.
Thank you, Ladi. Great to be here.
So first off, let's start with the NASD OTC Exchange's performance. It has regained some balance with the market cap back over 1 trillion naira. Tell us what led to this rebound.
Well, we had one significant listing at the beginning of the year, first quarter in the year, Purple Real Estate Incorporated, which is about 24 billion. So it bumped us back to 1 trillion. And it's been oscillating just like last year. But that's the nature of the unlisted securities market. I mean, we don't have, it's usually bargain hunting that you have. I mean, and so when the bargains drift in, it goes up. When the bargains are a bit paired, it kind of remains paired as well. You know, so I think that we're beginning to see a lot of activity of investors looking to take positions in companies that were previously unfancied and seem to turn them around and make something very positive of them.
And recently we got the SEC did release rules on trading of unlisted public securities. Tell us about these rules.
So those rules are not just released. Those rules were actually released in 2015. But I think that they become topical because we've spoken on this station constantly about what is the raison d'etre for the unlisted securities market. So it's important for people to know that for public companies and shareholders of public companies to know that trading any public company that is unlisted behind the market is illegal. And that is enshrined in the SEC rules, which say that all shares, all securities of unlisted public companies must be traded on a recognized listed exchange, usually an over-the-counter market like ours. So anyone who is trading those shares behind the market is actually going against those rules and is liable to certain penalties as stipulated by the Securities and Exchange Commission. I think that's important to know so that people who want to trade their shares bring them to the licensed exchange to have those trades effected, so that they don't fall foul of the rules.
And looking at these rules, do you think most of these unlisted companies will have any issues actually complying?
Well, some of them don't comply. And we look to see, we try to review to see which companies don't. So the control areas are the registrars of the companies, the company secretaries, and also the Corporate Affairs Commission. So I think it's important to just say that what the penalties are. First and foremost, it's a bit of a slap on the wrist. There's 100,000 naira for any company found to have flouted this rule. Company secretary, director, broker, to have flouted this rule. But then I think the more punitive side is that for as long as this non-compliance persists, the entity will be liable to pay 5,000 every day. So that ramps up the penalty. So it will be wrong for company secretaries, directors, brokers, and other parties to such trades to go and take that risk, because once they are pointed out, they'd have to pay those penalties. And compliance isn't very difficult. Accessing the OTC market is fairly flexible, fairly simple, and it's not too expensive to run trades in the prescribed way. So we invite all public unlisted companies and all the officers behind those companies to do the right thing. We don't want to be, and that's really not our role. We don't want to be a policeman of the market, but I think that it is only in the interest of compliance that where we find that this is happening, and this is going to be ramped up significantly going forward, where we find that this is happening, we would bring this to the knowledge of the overall regulatory body, which is the Securities and Exchange Commission, to met out its sanctions. But we are more in the direction of advocacy and partnership. So we urge the entities that are involved to willingly comply.
And tell me, who could currently be breaking these rules?
Yeah, so that's what I mentioned. The directors of the companies, the company secretaries particularly, and the registrars, who are an intrinsic part of the capital market that aid and abet such trading. They know that they shouldn't be doing that, and also brokers who participate in such trades. And that is the fine that they would have to pay, 100,000 on discovery, 5,000 naira every day, for which that non-compliance persists. So that's what the rule says, and we intend to follow the path of the rule to see that this happens.
Welcome back to watching Capital Market live on Channels Television. Now, continued conversation about the rules for the unlisted securities. I still have with me Mr. Waride Longe, MD, NASD OTC. Thank you for staying on.
Thank you.
So can you give us a review of corporate actions on the NASD OTC Securities Exchange year to date?
Okay, so I mean, I think this is pretty interesting because most people are not aware that that the companies on the unlisted securities market actually pay dividends, give bonuses, just like any other companies will. You know, so it's important to say that this is also harvest season for investors. You know, and some companies on our market have already declared dividends, you know, and we look at the double one PLCs of this world that used to be Mobile Oil, given a dividend of 8 naira 50 kobo. Friesland Campina, which is a very popular company, the makers of pig milk. I don't know whether I'm allowed to do this, you know, but I mean, this is the conversation we have about the companies that are admitted on our market. Friesland Campina, 7 naira 89 kobo, 2 naira 93 kobo, and VFD, a financial group, a young financial group, giving 7 naira 89 kobo. Capital Bank for also an interim dividend of 5 kobo. So we are still expecting quite a number of companies. I mean, the very popular ones like Niger Delta Exploration and Production, which is an indigenous oil and gas company, prospecting company. And then we also have Food Concept. We have the Central Securities Clearing and Settlement System. That is the platform that clears trades for the stock exchanges. And then we also have the Nigerian Mortgage Refinance Company and UBN Properties. I mean, those results are still being expected. So we look forward to that. I mean, and that gives investors some excitement and preparation for what they would have. So it's a good time to be looking at the market to see what return you can get. I mean, and I just say one thing, I mean, about the drop in the index. I mean, so also when the dividends are disbursed or marked down, when the companies are marked down for dividends, you see this drop. Or when the payments are made of those dividends, the investors who have now harvested their return tend sometimes to trade those shares. So they begin to look for bargains. And you see that blip in the index, in the companies, and that also affects the index. But then it goes back up after some time.
I guess it's important for investors to know that unlisted securities actually pay dividends too. But let's talk about pipeline transactions. What are investors in the market to expect going towards the close of first half of 2023?
Okay, I mean, I think that it's important to say that what the NASD OTC exchange is known for, of course, is the OTC market. Going forward, we want to expand that concept. I'll speak a little about the OTC market and then speak a little about what else is happening. So for the OTC market, one of the most important things that we find is that the main institutional investors are yet to be approved, I say that in quotes, to trade on our market, and that's the pension funds. But we've been in dialogue with them, and it's a progressive engagement, and we think that it's just imminent that they come to trade on our market. That will boost activity on our market significantly. And in preparation for that, we are originating a pension index, an index that reflects the companies that conform to the investment regulations, guidelines of the National Pension Commission for investment of pension funds. So we would put that out in a short while. It will be on our website. It will be publicized fairly frequently. So you'd see, as a pension fund administrator, just how you could make positive investment calls on companies that are listed, admitted to the NASD OTC exchange. So just to think about it, I mean, companies like Friesland Campina, Niger Delta have been powered on this market by retail investors, not institutional investors. So we look forward to the period, which we believe will not be too long when the institutional investors come in. But moving forward very quickly, I mean, I think that what we're trying to do is to show that there are other platforms on NASD. So we've spoken previously of the NASD Enterprise Portal, which really is an incubator platform for smaller companies, private companies that want to raise capital, but mostly SMEs. And what we find about the SMEs is that they really need to be prepared. So financial advisory and liquidity are very, very key to them. And what we're trying to do is to see how we can originate some kind of development support assistance so that when the companies come, they don't have to spend money or spend a lot of time looking for a financial advisor to put an information document together to prospect investors. And then, of course, having put the information document together, we also need to see how we work within our participating institutions and our stakeholders to get liquidity behind these companies. So we see Greek aggregation companies, we see some logistics companies, we see also some tech companies coming through, and we have to be able to, I'd say, curate those companies and then also be able to point them to capital to aid their growth. That's one other side. And then also a crowdfunding platform. We are proceeding. I think I'd leave that out for now until we begin to speak about the regulatory incubation invitation that we have got from the Securities and Exchange Commission. So that's yet another platform that we intend to bring alive. So going towards mid-year and towards the rest of the year, we want to be able to propel NASD from a multi-platform with a multi-platform approach, so that we expand the relevance of NASD to the capital market.
All right, looks like you have your hands full in this 2023. But thank you so much, Mr. Eweride Longe, Managing Director, NASD OTC. Thank you for giving us your weekend.
Thank you very much. Always a pleasure to be here.
Thank you. All right, so now let's look at some stories that made headlines in the capital market this week. We see the Lagos State government has announced fresh plans to raise 100 billion naira from the capital market under its 1 trillion naira debt and hybrid instruments issuance program. Issuance, which is part of the state's efforts to finance priority projects and boost economic growth, is a fixed-rate senior unsecured bond with a tenor of 10 years and a pricing range of 14.875 and 15.250%. According to the state government, proceeds from the bond issuance will be used to finance priority infrastructure projects. Meanwhile, the bond issuance, which has been assigned an AA long-term rating with a stable outlook by Augusto & Co. and GCR, closed on Friday. And the Securities and Exchange Commission says it's launched the first commodities fund, which is approved by the capital market regulator. Statement from the SEC mentions that the new asset class would enhance product diversification in the Nigerian economy while preventing the loss of investments to fake crowdfunding programs and Ponzi schemes. The capital market regulator explains that the launch of the fund would play a major role in the attainment of the 2015 to 2025 Nigerian Capital Market Master Plan of the SEC. An indigenous energy company, Seplat Energy PLC, has asked the Court of Appeal to set aside the judgment of Justice Iyangekwo of the Federal High Court of Abuja, which granted an ex parte interim order against the company and some of its officers. In its notice of appeal filed at the registry of the Federal High Court, Seplat asked the appellate court to allow the appeal and set aside the decision of the lower court made on May 11, 2023, which restrained the board chairman, the named independent non-executive directors, the chief operating officer, and the company secretary from operating or functioning as officers of Seplat Energy in any capacity or otherwise conducting the affairs of the company. Company's external counsel, senior advocate of Nigeria, Mr. Bode Olanipekun, says the interim orders were obtained by 3 shareholders who cumulatively have about 161 shares out of over 500 million issued shares of the company. Mr. Olanipekun noted that there are special procedures for removal of directors of a company under the Companies and Allied Matters Act, CAMA, and same was not the basis for the removal of surplus directors in this stance. And finally on the program, let's bring you some of the key expectations for Nigeria's capital market and financial market in the coming week. First, let's start with inflation data. All eyes will be on the April inflation report due to be released by the National Bureau of Statistics on Monday, May 15th. Country's March inflation data climbed higher by 0.13% to 22.04% in March, up from 21.91% recorded in February. At the bonds market, traders expect results of May 2023 FGN bond auction, which is due on Monday next week, to influence sentiment. At the same time, they anticipate uptick in bond yields on the back of the federal government's borrowing plan for this year. Over to the Treasury bills market, where traders expect lower demand amid tighter system liquidity. At the same time, yields are seen heading north, that space of the fixed income market. At the money market, the overnight lending rate is expected to trend upwards as traders expect that debits for federal government's bond auction and subnational issuance may offset expected 10 billion naira inflow from OMA maturities. And lastly, on the equities market, performance is expected to remain mixed as investors will rebalance their portfolios based on assessment of Q1 2023 corporate earnings released so far. And that's the program today. Thank you so much for watching. I'm Ladi Williams. Bye for now.